All right, good day, everyone. Doug here with the LincolnList.com. This is the stock market weekly review for the 24th of August. Hope all is doing well. Whoever said that summers were boring and nothing interesting happens until after Labor Day is mistaken. You just never know. I mean, what a crazy week we saw in the markets. If you've watched some of these videos that I've done recently, I said I was never going to really get biased or short biased, I should say, on the market. That level of 204, we've just really talked about this like a broken record. And I thought, we would start to see that towards Friday, maybe a little bit of support. I was really kind of focused on that to see how the market was going to handle that technical level that we've been really fighting with since March. And boy, when it just cleaned it out, I really expected to see a little bit more defense or at least a little bit more interest around that. No way, because Friday just turned into an onslaught, bloodbath. And this thing dives just from this 204 support right back down into where we've been hanging around in December, and that's where we are right now. Now, this is pretty good support, so it's going to be interesting to see how this continues to play out. I expect that you will see a bounce. What really matters here is what kind of open that we're going to get on Monday morning. If you start to see a flush or a little bit more panic selling into the morning, I think you're going to have a lot of, especially the high beta names or the old former runners, I think you're going to see a lot of opportunity there. If we gap up, or we bounce early without really having a flush out, then I think that whole plan has to change. And you have to be very selective about the names that you choose. I know it looks very good to some people who like dip buying to say, hey, all this stuff is on a discount, but this is a couple of days of some serious selling, and you got to be very, very careful, because if we start to lose that, we're really unable to bounce. You don't have any support in this chart till you run somewhere down around 182s. I'm not saying it's going to go there right away, but this definitely could be a little bit more panic. And for some of you out there, you haven't seen a market like this. If you started trading a couple of years ago, you haven't seen a flush like this. You haven't seen an outright panic. And for some of us that's been around for a while, yeah, this looks pretty good, but we've certainly seen worse. I'm not referring to a crisis here or a big correction, but we'll see what happens here. I think it's very, very important to judge what happens early in the morning to get a feel for how things are. And I think the theme's going to stay the same way, at least for me it is. I'm going to show you a couple of names that I like, which could definitely change. But let's take a look at a few of these. I think one on the top of the list has to be Netflix. You've got a big sell-off. Of course, everything's getting destroyed here. And if we look at the daily chart, you're right into the gap here. You got a little bit of love down there at this 102. I'm looking more down towards maybe the mid 90s here, or a sub 100 flush early. I think if you see that gap down and a little bit of selling in the morning or some panic flushing, this is probably something good to pick up, looking for a cross back over 100. That's if it sinks below. As with all the stocks I'm going to mention, the thing that I don't think we should be doing here is if you gap up and if you run. I don't think that's the clear signal to say, hey, let's start buying these names now they're on this decline. I think we'd have to see a couple of pullbacks intraday to solidify some support levels to let us know this is a nice bounce. Because these bounces, if they do bounce, which at some point they will, you just can't trust these things right now. I mean, they could be easily sold off, because you're going to have a lot of people in here who didn't get out, who are going to want to sell on any nice bounce. So that's coming at some point. Maybe it's not tomorrow, maybe it's Tuesday, Wednesday, who knows? But at some point it's going to come, and we'll learn a lot more about these setups when that happens. So if these gap up, I'd be very, very cautious about the names that I bought. Use very, very tight stops, because you have no idea if they're going to open up a couple of bucks and then sink down on the red, and then we'll start to see some lower levels get tested. I like this one here, going lower down towards 100. Any gap up, any push, I'm simply not interested, unless we flag, build a pattern, do something decent where you can control the risk here. But we'll see what happens here going into Monday. I kind of like Netflix, one of the ones I want to keep up on the list. Also want to take a look at GILD, GILD. Another one hammered here. Everything's hammered. I don't even need to say that. Pretty deep support as well down here towards the 99s. So again, the same thing that we're thinking about here towards Netflix. If you begin the day with a flush, then maybe you get a nice open 5, 6 in the red, bunch of selling to start where you're down towards this deep side of range, and then look to pick some off here using the first or second pivots to manage your risk. Just like Netflix, that's the way we want to trade it. Same thing I keep saying over and over again. If we decide to bounce early and everything starts ripping, this plan is off the table. You'd have to start looking at a few other stocks. Maybe you even want to short some of these if they begin with too much of a bounce. So that would change the way that I view these stocks right now. Right now, I think my focus number one is to look at some of these flushes and then try to pick some up off of the bottom where you can control the risk and you can get a nice bounce. And who knows, maybe that bounce will last for 1 or 2 days. So GILD is another one here I want to look at. CYBR, also a former runner that has some great range into it for traders. You got a little bit of a bounce here. When you're comparing it to the rest of the stocks, they just got obliterated and have chart patterns that start from the beginning of the day and ending on lows. This actually did do something here at this 50.66 level, which is a pretty decent level. I mean, you have a little more support, at least in my opinion, down here at the 47s to lower 47s to 47s and a half. That's the low that's going back into March 13th. I think that level would have to be tested for me to want to buy this thing, because that's a lot deeper support. Where it bounced here is not really, this triple bottom that it put in here on the 5-minute chart at 50.71 really has no relevance in a daily time frame that's as important as this. So when you do something like that and you see more significant support levels down a little bit lower, it's easy for these things to get breached and then just immediately flush into those numbers. So this one kind of interested me down here towards the mid 47s. Again, it's going to have to kind of follow through towards plan, but I kind of like CYBR. It's always been a pretty good trader, as has this AMBA. Has always been pretty good. Now with AMBA, I'm a little different on this one. I can use intraday support because I've traded this stock a lot. It's been pretty good to us. You got some nice flushes here. So again, if you get a range-bound flush where it starts the day, and what I mean by that is you're usually getting a good $6 to $8 on a just total beatdown day in stock price change on this. So like if you start the day out -5, -6, you might want to look around at a couple of close areas where you can kind of pick a level where you're willing to do business, control your risk, and pick a few of these. As I said in the beginning, you got a nice correction here, but you got to be very cautious about the names that you choose to trade. And the thing that you don't want to do here, in this case, is just go into, if you have to chase a green candle or you chase a bounce, I think you're going to put yourself at an incredible amount of risk, because those first bounces will probably be sold a little bit, because people who are in them want to get out of them. They're waiting for the first bounce. They're going to sell right into that strength. So it's going to be hard. It's going to take a few, intraday whacks at a couple of support levels before everyone gets enough confidence to say, okay, look, we've reached a short-term low. Maybe we're going to bounce today. Maybe we're going to bounce for the next 2 days. Now, saying that we're going to completely recover would be nuts. I'm not saying that any of these things would go back to highs. I would take every bounce with a grain of salt. It's a hit-and-run market for a trader right now. So you get your cash, you got to get out, because you just never know. I mean, as I said, you got some bounces in here intraday. Look, when this market started out on Friday, it looked like it wanted to go back up, and that would look like it was going to be the bounce, only to see it sell off and rotate lower. So, there's a lot of longs that got trapped there trying to play that move, which is okay. I mean, you got a nice little pivot down here. You can control risk, so it's not a bad trade. But you see how quickly it gets sold off, cycles down, makes that next pivot, cycles down, and it just keeps making lower highs all day, like a little stair step, until finally, people towards the end of the day just ready to jump out windows, and they just start hitting market orders, and everybody's just forget it. So let's keep an eye on this. I mean, you'll have some bounces no matter how bad the chart is. Same way when it goes up, you're always going to have pullbacks. But as traders, what we learn about the overall tempo of a stock is that retaliation. When a stock is down this much, or the market is down this much, and you're getting weak bounces that are being sold off or can't sustain themselves for longer than 20 to 30 minutes, you've got problems in that stock. You're probably going to see lower prices. We learn more from those bounces. So when you see them, you can make some great trades. I think you have to be very, very selective on not on the stocks and the levels that you choose to do business, and be very, very cautious not to get greedy here, because I think it's, as I said, a hit and run market's the best way I could describe it. You get in, you get 30 or 40 cents, get out, because in an hour you might see even worse of a situation. You might be giving back gains. So that's the way I think it needs to be traded right now at any time. Of course, that could change. We'll see how it works out tomorrow. As always, if you guys need help with your trading, feel free to reach out to me, service@thelincolnlist.com. I would be glad to answer any of your questions or take the 14-day free trial to the live trade room. Every day we trade these things live, and I think that's important for people to understand is that when you get in these situations and you see markets like this, or you're taking your career now to another level, which some of you are, you're starting to see something that you haven't seen in a couple of years. And maybe the dip isn't getting bought like it was a couple of months ago or a year ago. So your trading has to change. You have to constantly evolve as a trader. The way the market works, the way it behaves, it's always going to change. It's always going to be like that. So you have to continue to grow. So some of you are seeing something new. Very important that you trade this well. If you don't know what to do, as they say, when in doubt, palms out, don't do anything. So as always, if you need help, you know how to reach out to me. Other than that, have a great week of trading. Talk to you soon.